Welcome to your next market update. We'll be looking at the S&P, which I like using as a broad gauge of the equity markets, and we'll be looking after that at the euro, which is the most popular forex trading vehicle. Okay, so in the daily forex, what we have here is the blue line is the 20-day moving average, and the red line is the 50-day moving average, simple moving average. And I like using that to gauge the longer term trend. So you could see the 20 is now above the 50, not in a decisive way, but it looks like the intermediate term trend is now turned up. And we have kind of cross currents here. Now at this blue arrow, 3 candlesticks here, the tall white candle, the doji, and the black candle that gets more than halfway into the white candle. This is called an evening doji star because the middle portion is a doji rather than just a spinning top, which is a small real body. And that is a significant resistance area. But on the positive side, notice that we're marginally holding, and we've closed above the resistance zone shown by these 2 blue horizontal lines. Now what should happen is those 2 blue horizontal lines, as prior resistance, should now become first support, and indeed that is turning out to be the case. So right now we have a bit of a battle between near-term resistance, shown by the red line, and support. Now, keep in mind, these small real bodies, this doji, doesn't mean the trend has gone from up to down. It just means the trend has gone from up to neutral. And what that means is the market is no longer really overextended. We had a very sharp rally a few weeks ago. The market got overextended. It relieved its overbought condition. And what that means is if it gets back above the 1300 area, around, just giving a round number above the high of the evening star, then our next target would be, based on the weekly chart, would be, and that's what we're showing here, these dual bearish engulfing. This is actually a dark cloud cover. The black candle didn't get quite wrap around the white candle. Dark cloud cover and right around the same level as the bearish engulfing pattern. And this, by the way, is not an evening star, the 3 candles, because the black candle didn't get more than halfway to the white candle. But nonetheless, we have a strong resistance zone above the 1300 level, or the 1290 level. Up at 1340 to 1350. So on a close, especially a weekly close above 1300, my next target would be up at 1340 to 1350. And what I'm showing here, I didn't draw it exactly right. I should have drawn it from the low here. But we are making higher lows, so that is showing increasing demand as prices pull back. So demand is stepping in at higher price levels, which is a positive. Now on the euro, we're in a bear channel. And by the way, these blue lines, these are parallel lines. This is one of the things you'll find frequently in bear and bull channels. What you could do is make a falling support line or falling resistance line and just make a parallel line and throw it to where the support is. And you'll have a parallel, what's called a parallel channel. And that's exactly what we have here in the Euro-US. The selling area is the zone here shown by prior support. Over here and over here, and notice how nicely that prior support zone became resistance back in middle of December. And my feeling is it's still a strong resistance area, actually anywhere between, I'd say 131, the highs over here that I'm showing with my mouse, to within the zone, the top part of the zone here is at 132. Now, not much you could do here as far as selling it, because as I mentioned, my area to think about selling would be up here, 131, 132. And if you do sell, keep a stop above the 132.10 area. But the market is now approaching a support level. This is a piercing pattern we made on Monday. I'm doing the session late Monday. This little candle line here is just a couple of hours of trading on Monday, but this is a completed a couple of hours of trading after 5 o'clock when the new session began. So this is a completed session on Monday. So we have a little piercing pattern right around the 127. And the market is now approaching an important support area based on the weekly chart, down maybe about another 100 pips from here or so, around 126. There's a weekly chart. Notice this hammer, how nicely it held that support. This is from the summer of 2010. The hammer held a support area right over here. What I'm showing here, by the way, in the red arrow, notice the red, the black wrapping around the white. Why is that not a bearish engulfing pattern for those who have our education? Because the trend is wrong. A bearish engulfing pattern has to come after an uptrend. This is not an uptrend. So this is not a bearish engulfing pattern. Over here, with the black wrapping around the white during an uptrend, that's a bearish engulfing pattern. This is also a bearish engulfing pattern here from April. But anyway, the support area is being approached here right around the 126 level. And so I'd be looking for bullish candlestick signals right around 126 to say, okay, maybe the market's going to have a little bounce here. But realize that if you are buying in a bear, a very, very strong bear trend. Thanks for joining me, and may the candlesticks continue lighting your path to greater prosperity.